Good morning. My name is Teresa Crisanti, and I'm with the Illinois Restaurant Association. I'd like to thank you for joining today's webinar on Illinois Secure Choice and what small business owners need to know. During today's webinar, we'll hear from experts at the Illinois State Treasurer's Office. Today's webinar is being broadcast in English, Spanish, and Mandarin Chinese. To listen in Spanish or Chinese, please use the interpretation button in your toolbar. This webinar is being presented by the Illinois Restaurant Association in partnership with the Cook County Small Business Source. Established to ensure businesses emerge from COVID-19 intact and positioned for growth, the Small Business Source connects small business owners with expert guidance and support. Services include no-cost business advising, resources, and events that connect small business owners with a community of advisors. For one-on-one business advising, sign up at cookcountysmallbiz.org. It's free and signing up is easy. Also, before we begin, I'd like everyone to know that the Illinois Restaurant Association remains a resource to you. Our staff is focused on providing guidance and assistance to restaurants, bars, caterers, and other hospitality businesses in Illinois as we all work to emerge and operate fully again. We send regular email updates to thousands of operators around the state with what you need to know for your business, and you can sign up for those on our website. For today's webinar, you can use the Q&A button in your toolbar to post your questions at any time during the presentation. At this time, I'd like to introduce our panelists. With us today is Christine Chang, Director of Illinois Secure Choice. Christine, thank you so much for being here today, and please take it away.
Thank you, Teresa, so much for having us again. I think we did something around this time last year as well. So good morning, everyone. I hope you all are doing well. As Teresa mentioned, I work with the Illinois State Treasurer's Office. I work specifically on the Illinois Secure Choice Retirement Savings Program. And today I want to walk you through a few different things, including the state law that undergirds the actual program itself, talk a little bit more about what the retirement savings program is, also kind of look at it from the perspective of an employer who's facilitating Illinois Secure Choice as a way for their employees to save, discuss what the options are for a participant in the program, point you to some resources and support if you would like those things, and then certainly address your questions. So we'll get started first with why Illinois Secure Choice was created, why the Illinois State Legislature decided to do something related to retirement savings access. So when we look at the larger retirement savings landscape, what we find is that we are facing as a state, as a nation, a looming retirement savings crisis wherein too many people have too little saved for their retirement. And this has impacts on multiple levels. Certainly on the individual level, it's a very poor outcome for a worker to reach the end of their working career and discover they don't have enough to subsist on. So AARP has said that the average Illinoisan receives about $1,600 per month in Social Security benefits. That doesn't get you very far, and Social Security was never meant to be the sole source of income in retirement. So the stat I'll give you here related to the individuals, nearly half of working age families have nothing at all saved formally in retirement accounts. This is also an issue on a much larger, more macro level, which is that we as a state, we as taxpayers, are going to face increased costs as more retirees rely on public assistance programs. So the price tag attached to that is about $8.8 billion over a 20-year period due to this lack of retirement savings sufficiency. The good news is there is certainly a mechanism out there that would help more workers have access to retirement savings and really to start putting that money away. AARP has found that workers are 15 times more likely to save for retirement if they can do so at work through payroll deduction. At the same time, we also know that 40% of our private sector workers here in the state don't have access to a workplace retirement program. And if we really drill down even further into that, when you look at which segment of workers has less access to a workplace retirement option, it's disproportionately workers at smaller businesses, workers with lower wages, workers of color, and female workers. So all of this, it kind of forms the backdrop against which the state of Illinois decided to do something. Next slide, please. So in 2015, the state of Illinois passed a law called the Illinois Secure Choice Savings Program Act. And what that state law says is that certain businesses, and we'll discuss which ones, need to either sponsor their own qualified retirement plan or facilitate employee participation in the Illinois Secure Choice Retirement Savings Program, thus giving more employees an easy way to save for retirement at work. We were the first state to pass this kind of legislation and the second state to launch a state-facilitated retirement savings program when we opened up Illinois Secure Choice in 2018. And as you can see from the map here, there has been growing interest in and momentum behind this type of state legislation. So there are 19 states that have enacted similar legislation. You see them in the map here shaded in red or pink. Next slide, please. So just to drill into what is Illinois Secure Choice as a retirement savings program. So of course, this program was created as part of the state law we just discussed, and it's meant to be a simple and easy way for Illinois workers to save for retirement. The way it works is that a participating employee would save a portion of their paycheck into an individual retirement account or an IRA through payroll deduction that's facilitated by their employer. The program is overseen by a 7-member public board, of which the Illinois State Treasurer is the chair, and hence why the State Treasurer's office is involved in helping the board with program implementation. The program is administered by a private sector financial services firm called Ascensus. So Ascensus is the board's partner in terms of a lot of day-to-day implementation, including record keeping, tax form issuance, withdrawal requests, things along those lines. I want to touch on a few key other attributes of the program. So first, this program is completely voluntary for employees. It is up to them whether or not this is something they would like to use as a way to save for retirement. We do use automatic enrollment as a best practice that's taken from the larger 401k industry. But employee always has the chance to opt out, and even if they opt out, they can choose to opt back in later if their preferences or their circumstances change. The program is also built with some thoughtful default settings, so we'll talk about exactly what those are. So that kind of accommodates a participant who may want to be more kind of set it and forget it, or somebody who wants to be more passively engaged with this account. But there are also opportunities for a participant to customize their account, and again, we'll go over those details. The final attribute I want to highlight is that these Illinois Secure Choice accounts are portable, which is to say these accounts always belong to the participant. So again, the vehicle is an individual retirement account. That I is really important. This means that that account, those funds are always in the control of that participant. It's not tied to their employer. So we have a number of current participants who work for multiple employers simultaneously. We have employees who move from one job to another. They can take this account with them. If they move out of state, this account can move with them. It's always their money. They're always in control of it. On the next slide, we'll talk a little bit more about which employers are covered by the state law. So there are really just 3 criteria for employers. First, that they're not offering a qualified retirement plan. Second, that they had at least 5 Illinois employees in the previous calendar year. And third, that they've been in business for at least 2 years. So employers that meet those criteria who are non-governmental entities would either need to facilitate Illinois Secure Choice or start sponsoring their own qualified retirement plan, again, as a way to increase options for Illinois workers to have an easy way to save for retirement. Before I get into the exact, how do we determine employee count, I just want to say again, the overriding spirit of the state law is to really increase retirement savings for Illinois workers. From our perspective, an employer should make the most informed decision that they can. They should really look at what's available to them as options in the marketplace and really evaluate where they are in terms of capacity, in terms of objectives, to make an informed decision. So for some of those employers, a private plan is a great fit, for instance, a 401k or a simple IRA. For some employers, Illinois Secure Choice is kind of best meets their needs for where they are today. But okay, just let me delve in for just a minute here about how employee count is determined. We get this question quite a bit because people say, well, when you say at least 5 Illinois employees, what's the basis for that employee count? So the answer is the number is based on quarterly withholding income tax returns the employer submitted to the Illinois Department of Revenue across the previous calendar year. So to get really specific on this, this is Form IL 941. In particular, we're looking at Schedule P of that form and the number of individuals listed that had a positive amount of Illinois withholdings. So we're taking the quarterly counts from each of the 4 quarters of 2022, averaging that, and that's how we're determining if somebody is at that 5 or above level. Again, employers have to have at least 5 Illinois employees in each quarter of the previous calendar year to be considered of the right size. We can then now move on to talk about which employees are eligible to participate in Illinois Secure Choice. So again, we've got another set of 3 criteria here. Number 1, the employee needs to have wages that are allocable to Illinois. Number 2, they need to be aged 18 or older. And number 3, they need to have either a Social Security number or an individual taxpayer identification number, also known as an ITIN. On that first point about having wages allocable to Illinois, I want to dig in on this one a little bit deeper here. The state of residence for that employee is not a factor. We obviously border a number of other states. We have other states' residents who are working here in Illinois. The key determining factor here is whether or not that employee is being paid wages that are allocable to Illinois. To kind of tie it back to the data source we talked about previously, think about who you list on your Schedule P of your quarterly withholding income tax return as having earned Illinois wages and thus having Illinois withholdings. I also want to point out that worker status is not a determining factor. So an employee can be full-time or part-time, temporary or seasonal. That has no bearing on their eligibility. And the other thing I want to talk about is that a business owner, if they're being paid W-2 wages from the business, is also considered an eligible employee. Before we move on, I also do want to highlight that Illinois Secure Choice is open for self-enrollment. So this would be an option for an individual who has earned income, but who doesn't work for an employer that facilitates Secure Choice. So that could be somebody who works for an employer who just doesn't facilitate the program. Maybe they have their own retirement plan already in place, or it could be somebody who is their own employer, somebody who's self-employed, somebody who's part of the gig economy. So this program, again, is open to any individual who has earned income. On the next slide, we'll talk about how eligible employers have been onboarded into the program over time. So we have been onboarding employers since we launched in 2018, and we've been doing it based on how large the business is. So we started with the state's largest employers, and then each year we've been moving our way down to smaller and smaller employers. For 2023, our focus ahead of a November 1st deadline is 2 groups of employers. Number 1, employers that had 5 to 15 Illinois employees in 2022, and number 2, a relatively small group of larger employers who are newly on our radar for this year. So for those groups of employers that we're contacting this year, the November 1st deadline is the date by which, or as close to that as you can, by which that employer would either start the onboarding process for getting Illinois Secure Choice in place, if that's the route that they want to take to provide retirement savings options, or if they have a qualified retirement plan in place, they would request an exemption by that date. And so that's a very easy process by which you let us know that you have a certain type of plan in place, and thus you are exempt from the state law. The last bullet on this slide is maybe more for reference than the actual discussion at this moment, but we are often asked, what about an employer who has fewer than 5 Illinois employees? And the short answer there is that that kind of employer who's much smaller is not covered by the state law in the same way as covered employers. And so they would not facilitate employee enrollment in the program the same way as I will describe in a few minutes. But certainly if they had employees who were self-enrolled in Illinois Secure Choice, that employer could choose to facilitate payroll deduction. They're not obligated to, but that's something that they could do if they wanted to. In terms of how we communicate with employers covered by the state law, ahead of any November 1st annual registration deadline, we start communicating directly with those employers starting in late July, so about 100 days before that deadline. As a note, we do pre-screen some employers out before we start the notification process, and the basis of that is data that's available from the U.S. Department of Labor related to Form 5500 that would need to be filed by plan sponsors, qualified plan sponsors. So we do some level of pre-screening. If you're in a situation where you're not sure if you are covered by this state law, you haven't received any of our notifications, but maybe you're wondering, was it lost in the mail or something like that? Keep in mind, you can always call our client services number, which you'll see at the end of today's presentation, to ask them to check the status of your business. So just know that that's always an option. In terms of how we communicate, direct mail is our main mode of communication, and you can see a sample letter there on the left, a print letter going out by mail. We are using addresses that are provided to us by the Illinois Department of Revenue. We do supplement with email communications where we have valid email addresses, again, from Department of Revenue. So on the right, you can see a sample email communication. I want to touch on enforcement because this is a topic that comes up every now and again. Per statute, there are potential penalties for employers who are not compliant with the state law. These penalties would be assessed by the Illinois Department of Revenue, or you'll hear me refer to them as IDOR. Per statute, the penalty amounts are $250 per employee for the first calendar year of noncompliance, $500 per employee for any second or subsequent year of noncompliance. I also want to make a note here that IDOR does not take action immediately following an annual November 1st deadline. So for instance, 2023 is the first year that IDOR has formally taken enforcement action. Their focus has been on calendar year 2021, and any employers who are today still non-compliant who were notified of their requirements before 2021 started. And then finally on this slide, just want to provide an overview of the IDOR notice process. The first thing that IDOR would issue is a notice of proposed assessment, which lets the employer know that they appear to be out of compliance with the state law, that they have 120 days to come into compliance before the proposed assessment would actually be assessed. And if an employer were to pass through that 120 days without becoming compliant, then IDOR would issue a notice of assessment indicating how much they're being penalized for. In this next section, we're going to talk about what it looks like for an employer who's facilitating secure choice, so you can kind of get a sense of what that perspective looks like. So the first thing we'll talk about is what an employer's responsibilities are if they are facilitating Illinois secure choice. So if we look at the column on the left, there really only are a few things that the employer would do if they're going to be facilitating secure choice. So first, they would register by or as close to that November 1st deadline as they can, and we're happy to work with you if you can't meet that deadline. Number two, once you start that registration process, you'll begin setting up your online account on our website in a section that we tend to call our employer portal. So you'll see in a few slides what that portal looks like. The next step would be to submit a roster of eligible employees and on an ongoing basis to maintain that roster. So adding new hires when you have them, marking employees who have left you as inactive, that sort of thing. And then finally, and this is kind of the most critical part if you really think about how employees are funding their retirement accounts, every pay period you would do payroll deduction and submit contributions for all of the employees that you have that are participating in the program. On the right, I want to talk about things that facilitating employers cannot and should not do. So on the cannot side, you will not incur any program fees as an employer, you will not have any fiduciary responsibility, and you're not allowed to make matching contributions. In terms of things that you ought not do, you don't want to be encouraging or discouraging employees to either participate or not participate. You're not responsible for answering questions that employees might have about investment choices or participation. You don't process anything related to changes to that person's account. That's something that the employee themselves would manage with our program administrator. On the next slide, this is just sort of a visual look at what the process is, what the timeline is for employer as they start to get through the onboarding process for Secure Choice. So starting on the very left, when you receive that communication from us as a covered employer, you're going to see a 6-character access code. And so that will be kind of the key to starting the registration process online. So you would come online if you're intending to facilitate Secure Choice. You would come to the website, ilsecurechoice.com, and then start that registration process, and we'll kind of show you a screenshot of what that looks like. Once you register, you have 30 days to then upload a roster of eligible employees. So that would be your very next step. Let us know who from your staff is eligible so that we can then start communications to them. So once you upload your employee roster, that's going to kick off a communication from our program headquarters directly to those employees to let them know what this program is, what their options are, and what they need to do. This also kicks off a 30-day employee decision period. So every employee has that 30 days in which they can do one of 3 things, and we'll go into more detail later. They can choose to do nothing if they want to be automatically enrolled in the program at the default settings. They can simply do nothing and then get auto enrolled. Number 2, they can customize that account and they can change a few things away from the default settings. And finally, if this isn't the right time or opportunity, they can opt out. At the conclusion of that 30-day employee decision period, that's the point at which you would do the payroll deductions for all of your employees who are participating in Secure Choice, and then transfer funds so that the dollars that you withheld from those employee paychecks can then be transferred to the IRAs for each of those participating employees. So what we have here is just kind of thinking back to sequentially the beginning of the process. When you receive that welcome notification, whether it be by print mail or an email, you're going to see that 6-character access code for Secure Choice. So you can see it highlighted here in the orange box. Just for reference, if you are getting an email, it will come from client services at ilsecurechoice.com. And then you can see you would come online to ilsecurechoice.com and then actually start the process. So this is the beginning step for either pathway, either if you are registering for Secure Choice or if you're reporting an exemption because you have a qualified plan in place. The next slide is going to show you a look at the employer portal that I mentioned. So this is the portal that you would use to help administer the program. Want to highlight a few sections here. So right down the center of the screen in this middle column, this is the dashboard that's telling you where in the process you are and what's next. So if you look at all the steps that are outlined there, this exactly follows what we talked about in the timeline view that we looked at a little while ago. So it's going to let you know where in the process you are and then what's next. So it's very intuitive. On the right side of the screen, you're going to see links to common resources that are sometimes needed in terms of FAQ and some other resources that are there. So that's all there for your reference. And then on the left, there's a navigation panel. So want to call out a few different sections here. First thing is you can add, and it's in a section called administrators, but you can add a delegate who's maybe somebody else from your organization that's going to help you with administering the program. We know that you as a business owner may not be the person who's actually doing administration of this on a payroll-to-payroll basis. There may be some other member of your staff or a bookkeeper who's going to help with that. Kind of in a similar vein, if you're working with a payroll provider, you can add that person to your account to have some limited or you can set what level of access they have. I will say there are varying levels of integration that are available between Secure Choice and various payroll providers. So certainly if you do have a payroll provider, we would advise that you have a conversation with that provider to really understand and come to an agreement about what you are doing in this process and what that provider might do for you. And then the last thing that I want to mention is that you can absolutely add your banking information if you would like. The most common way that our facilitating employers transmit funds each pay period is through ACH. So if you want to use that method, you can just load your banking information here one time, and then it's there for any pay period that comes in the future. On the next slide, we're moving on in the process from registration to the very next step, which is uploading that roster of eligible employees. So you can see the highlight here is to the Add Employees button. You can add employees in 2 ways. Number 1, you can download an Excel template that you can use for that upload, or number 2, you can manually enter that information online. So the really critical thing here is no employee has the ability to take any action on Secure Choice until they've been uploaded by their employer. So this is a really critical step. And as I mentioned before, once you do that upload of employee information, that's going to kick off our program sending information directly to employees so they know what this opportunity is. We will also send you a copy of that information so that you can pass it along too. We know some employees are more apt to open something from their employer. So, you can help at least with sort of that notification process for employees. And then on the next slide, we're going to show you kind of again sequentially the next step in the process, which is once you've uploaded your employees, they've had their 30 days to decide what they want to do. After that 30-day employee decision period, you're now going to see all the employees who are participating in the program and what percentage. So this is the time at which you would start to set up those payroll deductions. So setting aside a certain portion of each person's paycheck, and then the process of actually transferring those funds to the program so that those dollars can fund the IRAs of each of those participating employees. And before we move on to kind of the options that a participant will have, wanted to share a couple of testimonials from some of the employers that are helping to facilitate the program. So Pamela Frazier runs All-in-One Laundry Center in Springfield. She talks about how, as a small business owner who didn't have an existing retirement plan in place, Illinois Secure Choice made it easy to facilitate the program with a very limited employer role. So as we discussed, the employer in this situation plays a very administrative role. They're not a plan sponsor. They don't have fiduciary responsibility. So she talks about how she highly recommends to any employer looking for retirement savings option to use Illinois Secure Choice as a way for employees to save through payroll deduction. On the right, we have Rob Hendrickson, a co-owner of Green Paws Chicago. He talks about how Secure Choice helps their business maintain a competitive edge in appealing to prospective employees and keeping existing employees happy, which is, of course, an important consideration in today's tight labor market. So we have heard that from a number of employers too, where to remain competitive in this kind of labor market, you really have to think about what package of benefits you're offering to your current employees and to prospective ones as well. So now we'll talk about what options are available for employees when they're thinking about participating in the program. So the next slide just recaps again the process by which an employee would get enrolled into Secure Choice. As we talked about, the employer will upload that roster of eligible employees, and that's when employees are notified by our program of what that program is and what their choices are. In that 30-day employee decision period, employees can do one of three things, which we'll dig into a little further in the next slide. They can either do nothing to be auto-enrolled, the standard settings, they can customize their account, or they can opt out. So to dig in a little further here, if somebody chooses to do nothing and they want to be enrolled with the standard settings, what are those settings? Number one, the type of IRA that's the default is a Roth IRA, which means it's funded with after-tax contributions. The contribution rate, the default setting is 5% of gross pay. And then in terms of what the default investment option is, for the first 90 days that a participant is with the program, their funds are in a money market fund just to preserve that initial capital. And then after the 90 days, those funds are then swept into a target date fund that most closely aligns to when that participant will turn age 65. And we'll talk about the target date fund in a little bit more detail later. The second option that an employee would have in their 30-day decision period is to customize their account. So if they want to utilize Illinois Secure Choice, but they want to change some aspects of what the defaults are, they're free to do so. So if, for instance, if they would like to change their contribution rate to something other than 5%, they can do that. If they would like to change their investment option to something other than the target date fund, they can do that. If they want to designate beneficiaries, which we always recommend for any type of financial product, they could do that. The third option is that employee could choose to opt out. And so the easiest way to do that, the most efficient way to do that, is for them, the employee, to pick up the phone and call our client services team. That's the quickest way to do it. They get confirmation right there. As well, that employee can go online to our website to do the same thing. Third, there is a mailed form, but not as efficient or as quick as the phone or the online options. On the next slide, we'll talk a little bit more about customization. So as I mentioned, the default type of IRA is a Roth IRA, again, funded with after-tax contributions. We do sometimes get asked if somebody could use a traditional IRA instead, which would be funded with pre-tax dollars. And the answer is that yes, and participant is welcome to do that. We would be able to open a traditional IRA for that person so that those contributions are put in the right way. You as an employer would not change anything that you do related to your payroll deduction and transferring of funds process. For you as an employer, it's always an after-tax contribution. The participant themselves is doing a recharacterization on their own taxes and things like that. So you as an employer don't need to do anything different in that scenario. We mentioned this because it is a customization option. We don't have a lot of activity on the traditional IRA side. The vast majority of our participants are using the default Roth IRA. Related to contribution rate, again, the default is 5% with automatic escalation each year of an additional 1% until it reaches 10%, at which point it holds. A saver can choose, or a participant can choose, to set that contribution rate to whatever level they feel is appropriate for them, anywhere from 1 to 100% of their earnings, subject, though, of course, to annual contribution limits that are set by the IRS. So for 2023, for individuals who are under the age of 50, that annual contribution limit is $6,500. If you are age 50 or older, you have an additional $1,000 catch-up contribution, thus your contribution limit is $7,500. So a participant, again, can pick that percentage that best aligns to where they want to be. As well, related to automatic escalation of their contribution rate, they can certainly turn that feature off if that's not what they want, if they want to just hold at a certain percentage and not have escalation, or whatever combination of things, they're free to control that feature. And then related to investment options. So again, the standard setting is for the funds to go into a money market fund for the first 90 days and then be swept into a target date fund. But certainly a participant can choose any of our other 3 investment options. So on the next slide, I'll dig in a little deeper on those investment options. So the board was very deliberate in terms of setting the defaults, but also setting the investment menu. And they really wanted to make sure that there were a range of options to accommodate different risk tolerances, but also were mindful of not offering so much complexity and so many options such that the participant then says, I really don't know what to do with this. I don't know how to make a decision. Maybe I just won't do something, because that's a part of the reason why a lot of individual workers haven't ventured into the IRA market before, because they feel overwhelmed by the number of choices that are out there. So what you see here is the investment menu built by the board. I'll talk about the target date fund separately, but a couple of takeaways here. First, and I mentioned this earlier, all of these funds are managed by professional investment managers. The state does not touch participant dollars. You can see the investment managers there on the right. They are State Street, BlackRock, and Charles Schwab. Another thing here is that the fees that are charged to participants in the program is an asset-based fee. So it's 75 basis points, or in other words, 0.75%. Another way to look at that would be about 75 cents for every $100 in the investment account. If we take a look at the options, they range in terms of preferences. So we have a capital preservation fund that's all about safety and liquidity. We have a conservative fund that's tracking the bond market. And we have a growth fund that's tracking the S&P 500 for somebody who wants a little bit more upside potential, but understanding there's a little bit more risk there. And then related to the target date fund. So this is our default option, by far the most popular choice amongst the participants in our program, but also the target date fund is a very popular vehicle in the larger retirement space as a whole. And the beauty of the target retirement date fund is the saver, the participant, does not need to do anything. The fund itself is going to adjust the allocation of assets to become more conservative as that participant gets closer and closer to their target retirement years. So it's going to be more heavy on stocks at the front end of somebody's journey, and it's going to become more bond heavy over time to really preserve capital. I believe we only have one other slide here, which is our resources and support. So I want to make sure you know where you can get additional information. So our website is, of course, a great resource, ilsecurechoice.com. There are resources there for employers who are wondering how to facilitate the program and who may have questions. There are resources there for participants in the program. We also have a dedicated service team through our client services department. So employers and participants are welcome to call in. The service team is available Monday through Friday, 8 a.m. to 8 p.m. Multilingual support is available through client services. So don't think of language as a barrier. It's not. Our client service team can handle any languages that come in. They're available by email as well. And then all the way to the right on the training and support side of things, we do operate a webinar series through our website. The program overview is really what you're hearing today, but we do have some how-to webinars too about how to add employees, how to submit contributions. We also have a webinar dedicated for our participants, or savers as we call them. And then we do have a field representative, Jamie Niles from Ascensus, who's out meeting with employers and employees every day of the week, who's available to meet with you and offer you any type of, one-on-one support that you might need or technical assistance. So that's pretty much everything that we have. Happy to take any questions that may have come up.
Thank you so much, Christine. I see questions coming in, and just a reminder, if you do have questions, please post them in the chat and we will read them now. So let's get started. The first question I have for you is on eligibility. So someone asked if, did you have to have at least 5 employees in each of the 4 quarters of 2022, or is it if there are 5 employees in at least 1 quarter?
Yes, thank you for that question. Per statute, the employer, to be eligible or to be covered by this state law, needs to have at least 5 Illinois employees in every quarter of the previous calendar year. So hopefully that clarifies. So it's at least 5 in every quarter of the previous calendar year.
Got it. Okay, and then someone else asked, what if an employee is over 65, already have their own IRA accounts, and are already collecting Social Security?
Yeah, so there's really no limitation in terms of which workers can choose to get an IRA through Illinois Secure Choice. So the presence of any other IRAs or other type forms of retirement income like Social Security, that has no bearing on if they can get an IRA through Illinois Secure Choice. Now, certainly somebody in that situation might choose not to because they think, I've already sort of covered my retirement savings basis in terms of all these different vehicles at play. But if the question is really getting at, would that person be limited in their ability to participate? No, they would not be.
Great, thank you. And is there one-on-one advising? I know you mentioned a little bit about people being available to speak to you, but is there one-on-one advising?
Right. So our client services team, nor Jamie, they will not provide investment advice. That is something that you'd want to go and see. If you were interested in that sort of thing, you'd want to seek that out on your own so that you had a professional you were speaking with that can really accommodate your situation and your goals and your timeline.
Got it. And I think that's all of the questions we have today. And as a reminder, everyone will get the slide deck and presentation at the conclusion of this webinar. So thank you so much, Christine, for being here today. I'd also like to thank the Cook County Small Business Source for their continued efforts to provide resources, information, and business advising to small businesses with their recovery. Thank you all for attending and have a great day.